This conference will now be recorded.
Good evening, ladies and gentlemen. It's Clueless Day Trading Frank. It's approximately 9:14 p.m. on an absolutely gorgeous evening here on the waterfront in Jersey City overlooking New York. God bless America. That's all I got to say. This is our Sunday weekend strategic webinar where we're going to discuss and forecast and predict and hopefully be correct going forward into the coming week and the weeks forward. Welcome. These sessions are recorded, uploaded to the Clueless Day Trading YouTube channel, as well as within 25 to 30 minutes after we finish, which is really important for people who like to listen to it. Directly, the GoToMeeting recording link is put out on the real-time Twitter feed. So you don't have to wait around for the YouTube channel and all that stuff. You can just click the GoToMeeting link and listen to it. And that applies to all the previous webinars. So please do that. These are helpful. They're great. They make me think and discuss with my great members. And I think they're very constructive for all of you people too. Full disclosure, this is purely for financial education, not for any solicitation or advice. All right, let's get in. So what's happening with the markets? Right there, you're looking at the screen. You guys can see the screen, right?
Yes.
Great. What does it say there? What are the 5 letters?
It's not a picnic, it's a panic.
Exactly. Picnic is bad. Panic is good. Buy low, sell high. Perfect answer. Thank you, Ed. Exactly. Panic is great. Panic, whether it's a technical reason or a fundamental reason or whatever the case, specifically if it's a technical reason, is the best time to buy. So anybody who bought the depths of the darkness on Friday, all those alerts and stuff that I put out there, or even on Thursday, are going to wake up tomorrow morning, as long as the futures stay here, up 30 points on the E-minis, which is S&P 500 futures. On the NASDAQ futures, we're up 123, moving higher. On the Dow futures, we are up. On the Dow futures, we are up. Let's see here. On the Dow futures, we are up on the Dow Jones Industrial Average 225 points. So anybody who bought those cheap calls given away at a bargain basement price is going to go cha-ching, what we call shooting fish in the barrel tomorrow morning, as long as we stay up at these levels. That is the market, my friends. Now, let me cover a couple of broad points, because I like to share my thoughts, the same things that go through my head. When things get a little bit tight, and listen to my previous webinars, I did say that be careful. You got to be fast in taking profits. You got, things are overbought on a short-term basis. We had a great webinar the last time. My great friend Paul, who's here tonight, asked me a couple of great questions regarding the $5 trillion, $4 trillion that's sitting on the sidelines, if they're going to come into the market. My answer was no, not at this point. Whichever the case, technical charts are not 100% panacea or a crystal ball to everything, but they do give you a roadmap, what the levels are on support, on resistance. Some stocks going nuts like CODX, things like that, NVAX, NVAX, but those are outliers. I'm talking the general market was down, even though the Dow was up 143 points. Boeing was up $2.50, which was interesting. Caterpillar was up 7 points. 4 points. I'm not in it right now, but I probably will get into it tomorrow. So bottom line is that when you have the pressure on the sexy part of the market, which is the growth momentum stocks, i.e. the NASDAQ, i.e. the techs, i.e. the Teslas, the Apples, the Facebooks, the Netflix, the Googles, the Amazon, and you're too overweight on them and trying to catch a falling knife on a short-term basis, obviously it's very painful. So let me ask you all a question, which you need to ask yourself before you start doing any trading tomorrow. Was it a stressful week, or was it a calm walk in the park picnic week last week? And please answer.
Stressful.
Stress. Exactly. Anyone say it wasn't stressful? Yes, we had a couple of spy puts here and there and stuff, but we But overall, it was a stressful week. So here is the thing that I want to put out to you guys, all of you. Okay. One thing I know trader behavior, human trader behavior inside out. I know the weak hands are going to fall out. The people who got all excited, oops, I shouldn't say that, excited, okay, with the sexy stocks. And then all of a sudden they don't want to sit in the training sessions. They don't want to learn how this game works. They don't want to understand all the intricacies of the VIX, which was still going down while the market was weak. What is that telling you? So they don't want to learn all that. And I'm not pointing fingers. That's not my job. They are the weak hands who are going to fall off. And they do. And they have. I had three cancellations this weekend from good people. But as a courtesy, I left the Twitter feed open so they can see how much money we're going to frigging make over this week. Okay? This week, starting on Monday morning, as long as we stay up here. And we will stay up there, given what is happening right now, which I'm going to cover in a couple of minutes. Some major news events. So this is what happens all the time. It's the same old playbook. Everybody wants to jump on a running horse. They slip and slide, they kind of hold on to the tail, and then they drag on and they make some profits, and then they put too much money into something called position management. I had a great conversation with a great member yesterday. He was very emotional because he was up a lot and then he pulled back. He's like, what the fuck? And there is nothing wrong with saying WTF, what the F, and screaming at your screens. That's fine. Every trader should do that. This is not your regular business. This is not, working in an engineering firm or at the post office or on a construction job. This is trading. This is a high stress, high emotional business. And it's okay to feel like crap. I've been doing this for a long time. So I'm just sharing my feelings with you. Trading is not for all of you. Mark my words. 95% of emotional traders, which is basically the case out there, are going to be done every single time the markets go through a technical correction, whether it be June, whether it be February, whether it be this recent week. Mark my words. The weak hands, the weak minds, the weak emotional souls not trying to be robotic, not trying to learn, are going to be done. Now, what's the bright side of that picture? Can somebody tell me? What's the bright side of that picture?
Capitulation marks the bottom.
The people still left around are going to win.
You guys, what? If you guys are politicians, I would never even freaking vote for you. This is what Donald would say. This is what a politician would say. This is what I would say. As long as the weak hands fall off, the strong ones go up. The lesser the amount of small emotional, not small, just emotional gambling traders fall out. Okay, of the market. People like us, people like you, who are striving to be tactical traders, who are trying to be robotic, will flourish. We want the weak hands out of the market. That is the bright side of the picture. Okay, we don't want our swing setups going up 15, 20, 30 points a day. Yes, we do, because we sell it and then it's great. We don't want that kind of euphoria. We want balanced technicals, a solid, consistent move up. Let the weak hands fall off. It's just like any other business. This business mentally is the same as if you try to be a SEAL or a Marine. I'm serious. And those are our heroes. Those are the people who are our ultimate heroes. The same type of mental discipline that they are taught is the same type of mental discipline we have to follow. And I just try as just a normal, simple, clueless 8 guy. That's what I try to teach. And that applies to your life too. There are some people who get freaked out because they got stopped for going over 10 miles over the speed limit, or got a parking ticket. They're like, oh my God, my wall's falling apart. It's falling apart like crazy. And there are people who houses are burning down in California who stay calm. Question is, which one do you want to be? So I will say that directly because I'm a serious, straightforward, hearted, or straight shooter. Okay, 95% of retail emotional traders are going to get wiped out in this market. And that has been the case for many, many, many years. More so in the last 10 years since the machines came into play. And what do we do at Clueless 8 Trading? We try to beat the machines by looking at many, many tactical charts, many, many different internals, trying to make a determination, trying to position manage and stay in the game. And guess what's going to happen? They're all going to come back on the next Elliott Wave 5 where we're moving up really fast. And guess what? They're going to again get slapped. It's not slapped. They're going to get wiped out. So I just want you guys to understand that. Please. This is not a kid's game. I have shown so many trades that have gone up 200, 300. Tesla went up 1,600%, almost 2,000%, if not more. Just to give you an example, I have nothing to prove. I'm not a genius. I'm just a normal guy. I am. And people who've known me as a normal person, who I've talked to, friends of mine, some of them are here, know that very well. But if you think you're going to come into the game as a gambling casino, please do me a favor. Go away. This is not a gambling casino. This is a quantifiable, risk-managed casino, not a gambling casino where you don't know where the numbers are coming from, how the cards are dealt. I don't care how well you count the cards. Okay? So, because this is my living. This is what I do to put food on the plate for my family, for my pets, and hopefully for myself. So think hard before you want to do this game. This is the most ultimate career in anyone's life, but you have to be mentally prepared. And it does not come naturally. This comes naturally, okay? Right there. See that? This comes naturally. You have to learn to be patient. Yeah, learn what? I want to be patient now. That is the problem with traders. And I'm guilty of that sometimes, but I have learned over the years to be really disciplined, to take my hits, look at those charts, buy those lows, and shoot fish in the barrel in the following 24 to 48 hours. Many, many of you have never done that, so you don't know the joy of it. Yeah, you've made a little bit of money, trading here and there. How about making the real FU money? And that doesn't come just because you think it's an easy game. This is not an easy game. I want to be dead clear about that. Are you guys listening to me, including Mr. Sasha?
Yep.
Exactly. This is not an easy game. And I'm not making it complicated. I'm actually making it easier because I'm showing you different correlations between the volatility index, between the overall market, showing you technical charts on certain stocks. And I'm okay with myself, even though I felt like crap on Friday afternoon on certain stocks for no reason. That's my fault. Okay? Patience, grasshopper. Which one are you? All right? So there we go. Let's start the session. So what are the positives that happened this weekend? Can somebody tell me, aside from Paul? What are the positives that happened? Aside from the fact that we're alive, God has given us another day. You think I'm kidding? I'm dead serious. We have another day to live. So God gave you a weekend. I'm not an evangelist. I'm just telling you the truth. So aside from that, what happened this weekend that was really positive? Anyone? Big Mark. And this is the market right now as it's going, as I showed you guys.
Like why the futures are up right now, or just what happened today?
Which part didn't you understand? Okay, I want to be very clear because I'm in a very like direct, like in the face kind of mood. Okay, and I like you. I like you, man.
Gilead
What?
acquired
Yes,
Immunomedics.
yes. Gilead, the company that no one even like knew about. I mean, kind of knows about, but still. For what premium? 100%. 100%. So IMMU, which we have traded before, and I didn't post, I had no clue. At 42 bucks, is going to open somewhere around 70 to 80 tomorrow. Great. Second point. What else? What was the other takeover in process? Buyout in process. Big one. Really big one. Okay. I don't have all night. So basically, you guys are just like, just like the rest of the average person out there. You don't really like check on things during the weekend, and it's just like, hey, man, just let's get drunk, fix the
Hey
house.
Frank, is it NVIDIA?
NVIDIA what? You're half correct. NVIDIA what?
Trying to get they have a possible buyout with the SoftBank for 40 billion. Chip maker.
Yes, ARM Holdings. Correct. Who is this? Who answered the question?
It's Amin.
Who's me?
No, it's Amin. RA.
Oh, Amin. Yeah, exactly. Amin. I'm sorry. Yeah, RA. So yes, NVIDIA's been working on buying ARM Holdings, which is a Netherlands-based firm, Holland, Dutch firm, and they're almost there. But ARM Holdings is a worldwide conglomerate, so under the rules of the Semiconductor, whatever, Worldwide Association, whatever, I forget the name, they have to get approval from China also, because ARM Holdings is one of those companies which sells globally. Remember, we're a global business world, okay? Regardless of the garbage that you hear, as you know my feelings about business. So yes, so they're almost done. But right now, NVIDIA's chairman, Jensen Huang, who is like Paul's like best friend ever. Paul's like big in NVIDIA. Good for you. And it just said that he's very confident that China's approval is coming. Now, game theory. Anyone understand the word game theory? What is game theory? Can somebody, like, if I stopped you on the street and I said, hey, dude, man, you're wearing the t-shirts in game theory, what does that mean? What does game theory mean in trading or in life? What is game theory?
Predicting the next step ahead.
Somebody else. What is game theory?
Theoretical strategy.
Oh, Jesus. See, the theory. You tell somebody on the street who's asking a game theory, you say theoretical strategy, he's going to mug you. Like, how about answering in a simple way? Like, Google it right now and say, hey, Frank, I know the answer. My son took game theory classes when he went to Center for Talented Youth, John Hopkins programs when he was like, before he went to his China internship. I think he was like 14 at that time. And I sat him down before he went. I said, listen, you're taking game theory probabilities of death. What the hell is that? Just sit down. 30 minutes on YouTube. And he was like, oh, I know the answer. Game theory are the different outcomes of a particular event that's going to happen based on the different variables that go into it. Simple English. If we make a decision in life, we consider a lot of variables that are going to go into it. Whether we're going to buy a car, a house, whether we're going to have a baby, whether you're going to get a dog. You consider the different you consider the different outcomes, and you look at what your cost is going to be, how much it's going to cost, so this and the different variables that go into it, right? So game theory is basically different outcomes, and look it up on your own, of a particular decision or event that's going to happen. Did you guys understand what I said, or it didn't make any sense?
Yep, makes sense.
So let me tell you the game theory aspect of, and I'm not going to even test you guys. Well, I will ask. Let's see, this is the fun part, man. This is how you get into Harvard Business School. I didn't. But I went to Babson, which was rated higher than Harvard 4 years in a row in one of their programs, okay, up in Boston. So let me ask you a question. So what is the implications of China approving the NVIDIA ARM deal? What is the game theory aspect of it that'll have a positive ripple effect on the tech industry? Believe me, no other trading service will teach you this crap, okay? Believe me. Nobody's going to make you as smart as you're going to be 3 months from now than Clueless 8 Trading. Believe me. So what do you think? Why is it such a positive? Why is it such a positive catalyst? Aside from the fact that NVIDIA is going to buy ARM Holdings and increase their chip production on the highest levels from 5G to God knows what, nanomillimeter stuff, 4-millimeter chips, which are not even in existence. Why is it so positive?
I'd say it's breaking down the barriers. Pinball action is going to open everything up to massive tech explosion. Could do it.
So you answer the first part of the question. Break down the barriers of what? With China saying, okay, you guys can go ahead and do it. So
yeah, you can get your foot in China, which is massive population, and
so you're answering the question is slightly different, but you are correct. Now here's Ed. Okay, who's answering this question while you guys are all sitting around twiddling your thumbs? With China saying yes to this takeover, it is lowering the animosity in the global tech industry between the US and China and Europe and the rest of the world. The Middle Easterners have nothing to do with tech. Okay, we know that. It's India, Korea, Japan, China, US, Canada. That's it. No Jamaican techs, sorry. So yes, you're right. I think it's from a game theory perspective, the outcomes, the positive outcomes or the ripple effect of what will happen is very positive. If China says, yes, go ahead, which Jensen Huang just said, he's almost fully confident. He's a Chinese American, a great entrepreneur, somebody who is, who's just a great American.
Yeah, and Frank?
Go ahead.
NVIDIA just completed a huge merger recently with Mellanox, the cloud database company.
Yes.
And the same questions came up. Can China approve it? And they did. So he's got a great relationship to begin with China.
Correct. So let me ask you a question. Despite all the political rhetoric between President Trump and wanting to shut down every Chinese, we're going to decouple and all that stuff, which I think is the most unbelievably stupid thing ever. It's political rhetoric. Why is China being so open about it? Because they know down the road there is going to be some sort of fairness. They're going to open up their markets, and they're feeling the pressure, no question about it. And this is absolutely positive. So that's the game theory aspect of it. Do you guys understand that?
Yeah, and China actually escalates things by not approving it as well.
Exactly. Well, that's a different story, but that also has a short-term negative effect, believe me. Okay. And they should approve it, and they're going to do it. So anyway, I don't want to get into this game theory stuff too much, but you guys understand what I just said?
Yep.
Good. And in the meantime, just keep on looking at the charts. Now, what was the third thing that was super positive? And Paul, please don't answer. This is not kindergarten class, but I want you guys to really learn on your own. What was the other third news over the weekend, which was super positive? Okay.
Don't have
No,
don't have all
no,
day. TikTok.
yeah, please. We don't have all day, please. Anyone know? Okay, no one knows. AstraZeneca. When
I thought you were
before
going to
this
say
market fallout started, okay, which was the first part of the week, one of the negative catalysts that drove the markets down was AstraZeneca with Oxford University, which President Trump has given AstraZeneca billions of dollars to work with them. They are one of those solid forerunners in coming up with the vaccine for COVID-19. They had to cancel their clinical trials because one of their patients, and it's all on my Twitter feed, for God's sakes, all right? And I even put out there that this was a minor thing, where one of the patients had a previous undisclosed illness and didn't fare too well. Didn't die, thank God. So they had to cancel the trial. So what did AstraZeneca do this weekend? They got full approval from the British authorities to start the trials again. Because that was a minor thing. That was it was like one out of, I don't know, hundreds of patients. That was very positive. Remember, the vaccine is one of the major components of driving this market up 3,000 points. Your Disneys, your Walmarts, your American Airlines, your Carnival Cruise Lines, and anything to do with entertainment, like opening up, like, just go through the roof. Boeing, planes, like, wow. AstraZeneca, AZN just restarted their trials. So guys, stay informed on your own. You don't have to be a nerd, but you don't need to be like completely like lost out there in the woods either, waiting for my Sunday webinar to tell you what the big things are. So I consider those three things overall as a positive catalyst. Now, the fourth thing is the pessimism, the fear that I talked about in the beginning. Like, my God, this is all over. Okay, like all over. We have an 18% correction on Apple, almost 20% from the highs. Told you guys Apple was going to go 137. Look at my charts way back. It went to 137. Like, I couldn't believe it went there. Well, of course I did, because I drew the charts based on technicals. Not that I knew it was going to get there. And it corrected 18 to 19% from that. 110 is the floor. We're going to look at that in a second. 110 is the floor. And people don't want to buy these things. Like Apple events on Tuesday. What do you think? They're going to completely bomb? Futures are up 31 points right now. And as I'm talking to you guys, I'm just, listen, man, my service is technical, but it's also behavioral modification called mental calibration. If I can mentally calibrate you guys to think bullish, I'm being straightforward. Believe in American business, regardless of the political back and forth and all the garbage. You guys down the road are going to be rich. Like, I mean, really rich. All right? Not like, oh, I had a good day, rich. Like, really, like FU money. But you have to mentally calibrate to do yourself that. It's like Napoleon Hill. 1 second. Napoleon Hill, think and grow rich, okay? It is not. I'm not a crazy bull. I've warned you guys last week, even prior to that, and that's exactly what happened. Go quickly, Paul, because I want to show this chart. Go ahead, sir.
Yeah, I was just going to bring up the TikTok. They're in a partnership, it sounds like, with Oracle. Frank, I just want to get just to get your opinion. Like, it seems to me like in the crash of 2008, 2009, or like whenever there's a big correction, is it more likely to have mergers? Because it seems like you have some mergers when things are down, and then that sort of is a catalyst to get going again.
I totally agree with you, 110%. If you're a big company looking to buy a hotshot company which was up 80% and now it's only up 30% and the prices are cheap, as a business, person, aren't you going to buy it? Of course.
Yeah. That was certainly the case with NVIDIA.
Yeah, exactly. And we're going to see a slew of mergers, not mergers, buyouts on the biotech side. On the biotech side and on the tech side. Why do you think I stick with the Blinks of the world and the Sonos and stuff? They're my long-term holdings. They're going to get bought out because they're real companies. Tesla's not going to get bought out. They'll buy somebody else. They might gobble up Nikola, which was a victim of a massive short attack last week by Hindenburg Capital or whatever the company, short selling company it is. Workhorse will probably get bought out. WKHS, another EV, electric vehicle company, hybrid. Okay? Yes, you're absolutely correct. Generally speaking, when you have these type of massive corrections, and this massive correction was so fast, so furious, I covered it on the last webinar. Yes or no, people?
Yep.
Yes or no, people? Somebody else, please.
Yes.
Exactly. Listen, the market's not a cakewalk, all right? You want to trade the market based on Robinhood and CNBC? Don't waste your money here. Seriously, just go away. You want to be just a simple average trader who keeps on going back and forth with the waves of the market, you know, don't spend time here. We teach serious crap, all right? Things that I taught you guys tonight, you'd have spent $50,000 at a business school to learn. Just the game theory part of it. Forget the rest of the stuff that I teach. Exactly. All right? Think about it for a minute. You got to be really mentally strong, and a mental strength doesn't come naturally because as humans are mentally weak. It's fight or flight. Most of the times it's flight, like, oh, danger's coming my way, I'm running the other way. There are very few people who fight danger. And in this business, you only fight danger through technical charting. Weak minds, gone. All right, forget about all that behavioral stuff. Let's get there. You're all grown people. You're all grown men and women. You know what I'm talking about. So fear is fine. Anger is fine. Frustration is fine. But what do you do with it? Do you turn it into a positive event, stress, or do you turn it into a negative stress? That's the question you all have to ask yourselves. Okay? That's how Tony Robbins became a multi-billionaire. I went to a birthday party for one of my friends, and one of these guys, he was the CFO of one of the largest restaurant companies in New York and globally. Very nice guy, very simple guy. So Tony Robbins somehow came in the conversation. He goes, what a freaking joke. People pay $20,000, $30,000 to listen to literal garbage. It is. I'm not putting down Tony Robbins. He's a very successful person. Like they say, money talks and shit walks. Doesn't matter how you do it. But he goes, some of his company referred that they should go into this, Tony Robbins, like, he has all these different programs. And he went there. He goes, man, that is such bullshit. But that's life. If it can change somebody's mind, then that's fine. So I ain't no Tony Robbins, all right? But for 70, 90 bucks a month, I will change your mental calibration, whatever it takes. And hopefully with your help, you'll change yours. And let the weak hands go away. All right, let's do this. What did I say? This is your daily chart of the market. The only thing you need to know, aside from Paul, somebody else, what did I say that you stay long the market if this keeps on happening? Please step up. And Sasha, I know you're new, but you got to listen to the GoToMeeting webinars and stuff like that, because otherwise it's going to be a one-way ticket out, all right? For yourself, not for me.
I hear you.
Now I'm telling you straight out, I don't care how smart you are, this and that. The market takes smartness and chews it out and spits it out. That's the reason the hedge funds and the big investment banks are still, for the year, not even up they're trading the market by almost 10 to 15 basis points. Okay, exactly. So aside from that, I'm not picking on you, Sasha, I'm just trying to help you because you're a good guy. All right, can somebody tell me what I said was the simplest thing that anybody can do and stay long the market as long as this happens, aside from the pattern, which is still a bull flag? Okay, I don't have all night, and I'm very disappointed in many of you.
Cash.
Looking at the stochastics, Frank?
Yeah, so looking at the stochastic. So I'm looking at the stochastic. So what's the answer? What does the stochastics have to keep on doing so you stay long the market of these extreme oversold levels that we saw back in March during the height of the COVID-19 crisis, when every pundit and every trading service told you, sell, 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 sell. And we said, buy, 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 buy. So yeah, you're half correct, but half correct doesn't give you the points. So
It has to keep on going up.
They're crossing over and then they're diverging up a little bit.
Thank you very much. Who's that, Ed?
Yep.
Exactly. And all of you were half right, but half right, like they say, half right doesn't get you into the job or that school. All right, exactly. They're crossing over and they're going up. So despite the minor fallout over the last 2 days, first of all, it's a bull flag. And we know what the levels are. We could be down 300 points and still be in a bull flag as long as this happens. Look, a child can understand the way I teach. I don't want to insult all of you, but think about it for a minute. I said that so many times on my last webinar. As long as you have, this is a positive divergence. We came down to the same level we were 3 days ago, except it made a higher low. This happens with stocks too. It happened with Apple. You get a positive divergence where the internals, which are the true indicators of what the underlying dark pools, like Paul puts out there, and what they're doing. It made a higher low while the markets came down to the same, almost the same level they were 3-4 days ago. That's called a positive divergence. Guys, this is not hard. All right? What's hard is your mind. So scared. Looking for polka dot diapers from Amazon. Like, oh my God, this market's done. I'm not saying we're going back to the old highs. I'm simply saying from a tactical basis, we can make crap loads of money 1 or 2 days this week. I still think that the latter part of September is going to be pretty ugly. Not every day, but in general. I still think that October, the first part of October is going to be pretty ugly. And the second part of October is going to be fine. So are you ready for it? So a simple answer, other than Ed and 2 other people who gave me half answers. Yes, as long as the stochastics keep on moving higher, you want to be a buyer. This has worked 99% of the time since 2009, when the market had a generational bottom, March 9, 2009. I should know that, like I've said 100 times, I'm sitting on my desk on Wall Street. When panicked big shot clients sold their apples at 80 bucks, that's post split. That means they sold it at 8 bucks. Panicked. And some of you are doing that again. Love it. Give it to me, baby. Just give me the cheap stuff. As long as the stows keep on moving higher, regardless of the intraday volatility, which none of us like. Does anyone like intraday volatility? The chop, the chop, the chop? Anyone love intraday volatility, the chop? Seriously, give me an answer. Come on, guys. Is anyone like scared of me to answer? I mean, come on, this is Frank, man. I'm the nicest guy in the world.
I don't.
That nice.
I don't like it because I'm usually in on a bull side. Yeah, it hurts.
It hurts. It's not just you. You're not that special, Ed. The market doesn't know, Ed. It's the same thing with all of us. We don't like it. But that happens every single time. So when you see a stock like Apple shopping around within a range, you want to buy the lower end of the range and wait, and then knowing that we can go to 116 and 120. Apple most probably tomorrow, with futures up 33 if it stays here, will open up $6 or $5. So those cheap calls that you guys just, hopefully some of you bought. I'm not your grandma or granddad. I don't really give a shit, actually. Okay. But you guys who did are going to be like, yes. Even the 140 calls that were 9 cents, you'll probably be selling it at a double, almost. Forget the 120 and the 122.5 that I told people to buy. You don't even have to wait for the Apple event on Tuesday. Gentlemen, ladies, every day is a time to wake up. It's mental calibration mixed in with technical, tactical expertise is what's going to make you a successful trader. You think a successful trader makes money every day? Does anyone think that? Does anyone think a successful trader makes money every day?
Not me.
That wasn't my question. Does a successful trader make money every single day?
No, this was Sasha.
Exactly. A successful trader actually doesn't make money 4 days a week. Ends the week on a good note and every month makes shitloads looking at his P&L or her P&L. That is a successful trader. Anyone know the definition of recency bias? What is recency bias in life or in trading? This is the E-minis, by the way. I'm liking what I see. What is the definition of recency bias? What do you think it means? Okay, I'm going to be waiting all night for an answer.
Frank, it's when you give it's when you give more weight to the present decision than the historical.
None of us could hear you because a lot of beeps came in.
Oh yeah, it's when you put overemphasis on the recent events versus the historical.
Yes, that is a answer. Somebody else give me another answer. Yeah, that is correct, but I'm going to give you a more simple answer. Anyone else? Okay, nobody. All right, great. All right, recency bias means that we always project as human beings. Our brains are wired, genetically wired, to think what is happening right now to us will continue to happen going forward. In other words, if you get hit with something bad, whether it's a legal bill, whether it's a family issue, whatever, you think, oh my God, the first thing the brain says is that this thing's it's so bad, this is going to continue. The same thing with the stock market. What is happening, like Paul said, on a recent basis, in this particular case, a couple of days. Emotional traders will continue to think that the future will be projected that way. In other words, it will be a continuation of what happened just within the past 48 to 72 hours. And that affects all of us, all of you, and especially some of you who I call the weak hands, the ones who like to drop out, which is fine. We want the weak hands out of the picture. So us strong hands get the lion's share of what's coming. So recency bias, and of course the final definition, Google it, simply means that we project what is happening right now will continue to happen going forward. Do you understand what I'm saying?
Yeah, that usually gets me on the upside because I keep thinking it's going to keep going up, and then it can get you that way too, right?
Of course, it applies to both ways. It applies to bulls and bears. So in this case, we're talking about what happened last week. The fastest correction in recent US history, financial history, on major indices. So we think, oh my God, it's going to be a continuation. And the media plays on that. The strategists and the analysts, okay, keep on talking about that. You listen to the bozos on Fast Money and options, whatever that they run on CNBC. Bearish, bearish, bearish. Carter Worth, he's going to probably sue me. Like Carter Worth, oh, you see a major breakdown in this thing, blah, 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 blah. How many times has Carter Worth been right on the markets? Can somebody look it up?
Not enough to quit his day job.
Yeah, exactly. All right. And then the rest of them like follow like little lemmings, like, screw them. I'm not saying the market's going all the way to new highs. I'm simply saying as a tactical trader, you can make a lot of money if you cut out the recency bias, look at the charts, and that's exactly what we're doing right now. Did you guys understand the definition of recency bias? And of course, you're going to look it up, right? Yes?
Yes.
Yes.
Good, good. Listen, I'm not in the business of my members like loving me. No one needs to love me, all right? Only person I need to be loved by is God and my wife and my son and my pets. That's it. I'm just telling you guys straight out what's wrong with our human mind and how you guys need to fix it. That's all. So let's take a look at this. Forget the chart up front, which is, if things work out, we're going back to 3420, which is the first level of the W formation. And I've already shown that on my other charts. So this is a 4-hour chart, the first cousin, the nearest relative to the daily. And as a trader, you have to look at the 4-hour if you want to be a swing trader. What is the 4-hour chart looking like? Fantastic. Fantastic. It's looking like a mini W. Does it have to go over 80 RSI readings? Not really. It can come back here to about 62, where it was when we peaked before we started falling on this week on the 8th. Could make it nosedive down. And that's probably what's going to happen. So if you look at this RSI and you mix it in with what's happening up front, 15-minute, 4-hour. Okay. So there we go. It looks pretty okay. We're going to recapture the 34 SMA on the 4-hour, 3380. I'll take 23 handles on the S&P. I'm not a greedy pig. And if we get to the 50 SMA on the 4-hour, not the daily, we're looking at 3422. Beautiful. That's almost 90 handles higher. That's 720 points, or roughly 700 points higher on the Dow. Let's look at the daily. So futures are up 33. They better stay this way tomorrow morning. Or even if they vacillate around when the Europeans open, because they tend to panic and buy more diapers than us. Trust me, European traders, man, seriously. Let's clean this out. Let me just take everything out. 1 second, clear drawing set. Yes. So what do? We hit the 50-day moving average twice. Now remember, you guys have computers, right? You guys have computers, right? You guys trade off computers, correct? I'm being a little bit sarcastic. You guys trade off computers, right?
NVIDIA.
Yes.
Paul, I'm not asking. Sasha, Ray, RA, you guys have computers. Do you guys draw your?
Yes,
you guys do draw your own charts, right? You do put your moving averages on your thing, right? Or do you just rely on me to explain it? Just asking. Can somebody please answer? I really don't have all night, guys. It's 10 o'clock.
I use both.
Good. So, but you guys, all of you need to have your own charts and simply put the moving averages and then structure it, do whatever you want. It's not rocket science. This is a daily chart of the S&P 500, the E-mini futures. the kabuki theater in the background of the actual S&P, right? Here's your 50, here's your 50, here's your 34. They're trending higher, fine. We retested the 50 twice. First on September 10th, and then on September 11th. I'm sorry, on the 9th, 10th, and 11th, almost a triple bottom, but specifically on the 9th and 11th. And now we are recapturing back the yellow line, which is the 5-day moving average. The next level of contact is 34.21. I mentioned that several times. So if you're technically orientated instead of emotionally disabled, you want to buy these SPYs as much as you can off the 50-day, and we slipped below the 50-day. We went below the 50-day right there. We went to 32.95. The 50 is at 33.18. These few numbers make you guys a lot of money. Buy the SPY calls. And on top of that, the overall formation is still a bull flag, which is incredible given the amount of damage that we sustained. And listening to the bozos and everybody out there on StockTwits and other trading forums who are literally 99% bearish, which makes me happy. I don't want happy people. Traders, I want traders who are scared. You guys got all a little too happy 2 weeks ago, and I warned you all. Don't get this happy. Be fast, be quick, scalp. There are definitively a froth based on standard deviation, i.e. the distance you move away from the 34 and the 50-day moving average, for example. So now that you guys are all a little scared, this is the time you make real money. And we are seriously deep oversold. Now, does this mean that we're going to make a moonshot starting tomorrow? No. We have big things coming. We got the Wednesday Fed meeting. The market's going to act funny. Always does. We have the Tuesday Apple event. If they don't satisfy, well, it doesn't really matter because the hedge funds are going to play games anyway. They might pull down Apple $3 and then run it up $4 the next day. I've seen it happen so many times, it's not even funny. So be ready for it. Okay?
Frank, question.
Yes, of course. Go ahead. And now it's questions for everyone. Yes, go ahead. Can you give me one quick second? I just have to let my dogs in from the patio. Hold on 1 second, sir. Yes, please go ahead, sir.
Just your thoughts. Are we can we see the 50-day moving average middle of the week again? Testing it.
Can we see it testing it in the middle of the week, like with the Fed meeting?
Correct.
Yes, that's a possibility. My simple theory is that here is the ultimate indicator, which I always show. The VIX kept on going down while the market was fluctuating like crazy during the day, which tells me the market's going higher. Yes, that is correct. Intraday volatility is something that I cannot predict. I can show you on my 15-minute charts and all that, ranges and all that, but it is very difficult to predict. So my simple theory is if we have a sharp run up, if we open up big tomorrow, of course I'm selling a bunch of stuff. Of course I am, because I bought a bunch of stuff hard on Thursday and Friday. Okay, so those are going to pay off beautifully. So my simple theory is that if we run up, and I've said this before, if we run up on Monday and Tuesday, then you obviously want to lower your exposure overall and have more cash on the side. Don't necessarily short. Don't short with monthly options expiration. I've explained this many times. That's Friday. It's quad witching, quadruple witching, where multiple different, index futures and options and stock options like index options and everything expire. Look it up on Investopedia. The actual definition is quad witching. And quad witching generally is a bullish event, not every day. If we run up Monday and Tuesday, Wednesday is going to be a down day. Just a quick sharp pullback. And then we're going to run up into Thursday. And then Friday morning will probably be up. Mark my words. And then Friday afternoon, we're going to give in once the options expire. So that's my answer to your question. Are you there?
Oh, thank you. Yes.
No problem. Now look at the VIX here. The VIX is a mixed signal, by the way. And if you look at this chart, which is external part of the VIX, that's a daily, that's a weekly VIX, So it's not like, this is not even caring about what's happening intraday, every hour, every 15 minutes when people are like, reaching for their diapers, all that crap. This is telling you what will happen going forward. Now the VIX is a derivative asset, so it moves kind of differently than a stock. It moves sharply higher, sharply lower, very quickly. So, see, I'm looking at this because I constructed this chart. I didn't construct the candles, those are the actual prices. I don't control the market. But I constructed a chart with the pivot, which is the yellow line, the gap fill, the ultimate lows, all the way down here, which is in the 10 range that we got to back on December 2019. So what is this telling me? Can somebody take a stab at it just for the hell of it? And I mean, looking at this overall picture and then looking at the internals, which I have already drawn, what is this telling us? Can somebody just take a frigging leap at it and try to explain to me? After that, I will explain. And this is weekly. This is telling you what's going to happen into October and November. Come on, guys, don't like sit around. It's 10:11 p.m. You have a life, I have a life. Come on. Then don't be scared to be wrong. In life, never be scared to be with the wrong answer, but step up and answer.
Could it be going down?
Don't give me that's like too simple an answer. At least you took a shot at it. Yeah, the candle is telling you it's going down. That's what you're looking at, right? The external.
Well, I was just looking at it. It hit the top Bollinger Band there twice, so I thought, well, maybe it might continue to go down.
Correct. So you're correct. However, how about looking underneath the surface where your blood pressure is? When the doctor takes your blood test and figures out whether you really are a sick person who's going to die in 3 months or whether you're going to be living for the next 300 years. How about looking at the internals? What are the internals telling you? But you're right on the external. The external is very clear. The weekly is a massive inverted hammer. So the weekly is basically telling us it's going down. Anybody can say that it's going down into the gap that's around between 19 and 21. Correct? Everyone agrees?
Yeah.
Yep.
So what does that mean for the overall markets on the front end?
We go up short term, and then
you're in the right path, man.
The stows are gonna, yeah, go ahead.
So yeah, basically this is a weekly chart. So this is not really short term. This is like going out into end of September. I'm not even showing the daily. I'm showing you the weekly. And I drew this chart like months and months ago. This is my ultimate canary in the coal mine that I watch like a hawk because it's always on one of my screens. One of my screens is only dedicated to the VIX and the VXX. So yes, the inverted hammer is telling you that it's going to come down towards the gap, right?
Right.
Okay, so that means what happens on the front end?
We go up.
Correct. What is the internals telling you? Somebody else take an attempt, please, instead of Ed getting the A pluses every time for the answers. I'm serious. Guys, I thought we lived in 2020. I mean, I'm asking a question. You guys are like, take a stab at it for the hell of it. Look at the internals. What are the internals telling you? This is the fast stock, STOEC, which is the fast stock, which is the short term. We call it F stock, which is the short term internal. And this is the slow stock, S stock, which is telling us more of the longer term picture.
On the slow stock, it's going up.
So what does that mean for the overall markets? If the slow stocks are trending up, which is pretty clear based on this thing, it doesn't have to go all the way up here. It can go up to this median reversion line and then pull back too. What does that mean?
It means the overall market would be going down.
Correct. And what is happening with the F stock, which is the fast stochastics, what we are concerned with as option traders over the short term?
It's coming back down.
Are you answering the question or answering a question with a question? Because that's how your voice sounds. Like if you were sitting with me on a Google interview, you'd be like, is it coming down? Like, come on, I asked you a question, be confident and give a definitive answer.
It's going down.
That's how you become a great options trader. Yeah, you go, it's going down. This is a double top, correct?
Yeah.
So it's going down. So what does that mean over the next couple of days? What the market's going to do to end the week on monthly options expiration?
Go up.
Exactly. Guys, this is not rocket science. And you guys really, at this point, some of you who have been with us for a couple of months and stuff, and I explained this repeatedly, guys need to get the hang of this. All right? Now, in the meantime, anything can happen. But what this is telling us, that once the market goes up to those levels that I'm showing you guys on the front end, on the S&P, then if the slow stows keep on continuing, that means the month of the latter part of September, like I said earlier, and the early part of October, these slow stows, if they go down, that means the market, after it bounces, will come down. Do you understand what I just said? And that's how you manage your positions. Like they say in New York, capiche? Come on, wake up. Now, let's take a look at, thank you for the answers, the few people who had the balls to answer. Oops, I'm sorry. All right, so let's take a look at the daily. The daily is exciting. If I showed you a chart like this on a stock, would you buy it?
No.
Somebody else, please. If I showed you a stock which the chart looked like this, would you buy it?
No, I see lower highs.
That's not my question, okay? Answer my question. Would you buy it? Yes or no?
Looks like a falling knife. No. No.
No. The answer is no. It can somebody who looks at it differently, because remember, it's called cognitive bias. Our brains look at things differently. You know, bears who are really dogmatically bearish, they look at a chart like this, they're like, of course I'm going to keep on buying it. I'm not going to disagree with them, but I'm going to say you're wrong. This is a full-scale pullback on the daily. I was showing you the weekly, which is the more zoomed out version. And it's telling us that we are most probably going to hit the upper end of this gap, which is 22, or at least the median line, the blue line. This is real technical stuff, okay? But it's not hard. The mid Bollinger is, what is that number on the right? Someone. What is the number on 2547? Let's, this is a real, like a frigging, like, gets on my books like as a, yes, the guy just got it, or the lady just got it, you know. So when do you think we're going to hit that 2535 this week?
Could be tomorrow morning. Tuesday, tomorrow morning? Yeah, it could be.
Or Tuesday. You got it, Ed. You guys listening? You got it. Exactly. Exactly. And once it hits that, what did I say a couple of minutes ago? If we go up Monday or Tuesday, then Wednesday is going to be a down day, which generally it is. It's a reset day. So we could come down like this and then do this. Okay? And that do this means Wednesday could be down 300 points because the games that the machines play, and they'll say, oh, the Fed didn't say the right thing, blah, 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 blah. And the next day it goes higher. So once it gets up there, it hits this line. And I've constructed this chart with meticulous precision. Sometimes it takes me not hours, but it takes me like a half an hour to construct a chart because I have to think like, where am I drawing the lines? What am I exactly doing? These charts are money in your pocket if you guys understand them. And if your brain keeps on saying, no, I don't really understand it, well, please don't be on my service. These are money charts. Okay? Yeah, exactly. And Ed got it. So you can come down here. The uptrend is a mid-Bollinger. And if it slices down to the gap, and somebody else please answers, if it slices down to the gap, what is the market going to do this week? If it goes straight down, this red bearish engulfing candle just becomes fatter and redder and hits the 22 upper gap fill mark. Remember, this is a gap fill. What is the market going to do? RA, answer.
Market's going to go higher.
Oh, duh. Market's going to go higher. Markets are going to go higher tomorrow. Like, how much of the markets are going to go higher? Give me a rough, like, really higher.
It's probably going to test the high, all-time high.
No. Now you're pushing it, man. Now you're pushing it. You should start drinking before you answer questions. Just kidding. No, you're right. Markets are going to be like a 400-500 point kind of move. You know what I'm saying? So you're right. Exactly. And once it hits this gap fill, what would tactical traders do with their money on things that they bought? Come on, RA, answer. You answered the right question. Sell. Because once it hits this gap fill, which is a massive support level, it will have to, from a technical standpoint, jump up. What does that mean for the markets on the front end, RA?
Then it's going to go down.
Exactly. Why do you think I make money and a lot of people lose money? Because I frigging try to teach you guys this stuff, and I know this stuff. I don't know what the market's going to do every 15 minutes, 20 minutes, 30 minutes. But you look at these things, the more you understand them, you become a real frigging baller. And excuse my French if I'm being very direct with some people. I don't want to be emotional. It took me years to get off the emotional stage. I might feel like crap certain days. I was swearing at my screens on Friday late afternoon. But, a lot of F-bombs. Doesn't matter. You need to be a robot in your head. I'm not giving you like algorithmic models like some trading services. I look at some of these trading services and they have these algorithmic models how to trade the market. I'm like, dude, I better pop like 9 Tylenols before you even look at your chart. And 9 out of 10 times it doesn't even work. But they promote it like it really works. That's okay. Everyone's got to use a free country. You do what you want. I'm trying to explain to you guys in a very simple fashion. Visual cognition. Now, what the slow stochastics are telling us that it is going down. So that means we have a good chance, not betting on it. I know Paul's going to say, yeah. It's a good chance we fly down, crossover down, hits the bottom. In that case, we're going to slice through this mid-Bollinger RA and hit the 22, and bang, it's going to be money, like literally all week.
Yeah.
Yeah, but you got to keep on looking at this before you say yeah, because before that, you can be crying, brother. Okay? Exactly.
If I had the MACD for VIX, it's looking pretty weak.
One second. Now, this fast stochastics is telling me that we are getting quite oversold very quickly. So, can somebody tell me if futures are up 40 frigging handles? And I had guys crying to me on DM, which is fine. I'll listen to your crying. I'll get you a seat on Oprah or Dr. Phil or like whatever. And then two guys canceled. Like, oh, I'm so sorry, man. You know, I couldn't really help you. Weak hands. I hate weak people. I don't hate weak people. I don't hate anyone. That's a terrible thing to say. Somebody said, I'm cutting expenses. Cutting expenses? $70? Could have made 700 on his small account tomorrow morning if he had just bought on Friday. Cutting expenses. Whew. Was America built on excuses? I don't think so, man. But that's okay. That's okay. You know, everyone's to their own. So what is the fast stochastics telling you? That with futures up 38 handles right now, if we open up, where are the fast stochastics going to be? Somebody else step up and answer, like Ray, answer. Ray, wake up and answer. Okay, Ray's like, F you, Frank, I don't want to hear about you. No. Okay, somebody else. Matt, could you answer, please? Or Big Mark. With futures up 40, this is not a real-time chart. Where do you think the fast stochastics are going to end up? Guys, it's 10:25. Give me an answer.
20.
Can you speak up a little bit? How about some confidence in somebody's voice?
20.
Or lower, correct? Yes, 20 or lower. So on the short term, it's oversold. Now, what happens when something gets oversold? What happens when something gets oversold, whether it's the stock or the VIX or whatever? What happens when an asset class gets oversold?
The price goes down.
Oh, Jesus Christ.
Reflex bounce.
Thank you. When something gets oversold, it bounces. It bounces. It bounces. It bounces. It bounces. Guys, why don't you guys get it? Of course prices go down. No, prices don't, yeah, prices go down because it got oversold. But once it gets oversold, it bounces. Now, if the VIX bounces short term, forget about this. This is the slow stochastic. This is the slow turtle. That's telling us that, yes, the markets want to go higher. Patience, grasshopper. But over the short term, markets open up 40 points. What do you do with things that you bought on Thursday and Friday? Remember, the VIX is the opposite of the market.
Take profits.
Answer my question. What do you do on Monday morning with futures opening up 40 handles? What's the word I'm looking for?
Sell.
Thank you. Jesus Christ. I love this, man. Of course it's profit, but it's sell. You sell to take a profit. So that's what I'm saying. The short term is telling us it's probably going to hit like below 20. Out on most of the fast moving positions, not the swing positions, the fast moving positions. Because once it starts to curl up, market's going to pull back. It's done that every single day last week. Yes or no?
Yes.
Markets open up. You don't sell within the first 30 minutes. You are down in a loss pit in the first hour. Yes or no?
Yep.
Exactly. So that's the way you got to do it if you want to be a trader. So guys, listen, I'm pretty exhausted. I think it was pretty intensive. Thank you for all your participation. Guys, brain. Use your brain. It is not hard. I repeat again, we are not Elon Musk. We are not Satya Nadella. Okay? We're not Sundar Pichai, Google. We're not Bill Gates. We're not Larry Ellison. We are just simple, tactical smart traders who are trying to make money off these massively precise tactical charts and the brains of those finest geniuses who rule the world and have made America great. That's all we're trying to do. Don't make this overcomplicated. Have a blessed evening. Let's make some money. Let's be ready for volatility. And this session was really powerful. And the behavioral content in your brain, I can't change it for you. That's already genetically wired. Change it for yourself. Overall, the markets are still in a bull market, but there will be intense volatility going into the latter part of September, October, first part of October, and let's see what happens. One day, one week at a time. How about that? Not one day at a time, 1 week at a time. And certain stocks will go to the roof. They'll get bought out. Stay engaged. Don't be a quitter. Spread the word out there. Get a lot of referrals in. Let's get on with it, man. We're all in the same boat. Good night.